Today, we're diving into a hot topic. Why the stock market beats real estate. This is a debate that has been going on for years, and it's time we break it down. So let's get into it. We'll look at the numbers, the pros and cons, and why one asset class might beat out the other. There's a new forecast from Goldman Sachs last week which predicts the S&P 500 could hit 5,600 points this year. Now that might not mean much to you at first glance, so let's break it down. What does this prediction really signify for investors like you and me? The S&P 500 is currently around 5,400 points. So, we're talking about a possible 200-point jump, which is roughly a 3% increase. Pretty impressive, right? The stock market is on fire this year, and the trend doesn't appear to be slowing down. Now, why do people invest in real estate? In Canada, real estate always seems to be a topic of conversation. Everyone needs a place to live, and owning real estate seems to be getting tougher as prices continue to rise and interest rates have shot up. As an investor in real estate, it's something that you can see and touch. You could drive by your property daily or weekly and check in on it. There is a certain peace of mind knowing that you own a physical asset that you can see, control, and potentially even add to or change as needed. Real estate investing is a lifestyle choice. People who are passionate about real estate really love all of the things that it involves. You have to consider location, neighborhood, taxes, safety, school districts, zoning, etc. There are a lot of variables involved, and as a DIY investor, it can be challenging. However, it can really pay off if you do your homework and find a great property. At the end of the day, it's not just an investment, it's a home, whether for you or for your tenants. It gives you options. You can decide to live in it one day once it's paid off. You could let it cash flow and pay you monthly. Or maybe one day your aging parents or family members need a place to live. If you're able to help them out, what a great feeling that would be. But here's the kicker. If you're aiming for sheer numbers and returns, the stock market often outperforms real estate. This is where the debate heats up. Think about it. With real estate, you have to put the legwork into finding a property. Once that's done, you need to close on it. Now that involves realtor fees, legal fees, taxes, and usually a mortgage. Once that is done, you have to prep it and list it for tenants. Now this could involve a light cleaning all the way up to possible costly repairs, then finding and vetting your tenants. Once you have tenants in place, you have to monitor the property for any issues or damage. If you don't have the time for this, you could hire a property manager for a fee. On the back end, you are calculating mortgage costs, including interest, insurance, property taxes, HOA fees or condo fees, repairs, maintenance, and maintaining a contingency fund in case of emergency or tenant turnover. Now, about 70% of Canadians opt for owning houses, while 30% rent. This shows a strong preference for owning real estate. But only 50% of people decide they will invest in the stock market. Why the huge difference? What makes people hesitant about investing in stocks, ETFs, or other funds? Well, for starters, the stock market may be harder to understand for people. There is a certain learning curve that involves researching and understanding stocks and funds and how they work. Also deciding what type of investor you are, dividend, income growth, hybrid. There are many variations and none are necessarily wrong. There's finding and setting up a brokerage account, learning the ticker symbols, understanding acronyms like AUM, PE ratios, yield percentages. And for many new investors, they try to time the market to get into a stock at the right time. One thing is for certain though, time in the market beats timing the market almost every time. Now if you take the time to understand it, the returns you can get in the stock market can be well rewarded. You can bypass all of the legwork involved in a rental property and are able to collect income straight off your smartphone, tablet, or computer by simply buying and holding stocks or funds. Now let's break it down a little more. Which asset class is really the better investment in 2024? Real estate is a physical asset. The idea is pretty straightforward for people to understand. You purchase a property, maintain it, and the idea is that its value will increase over the time you own it. But the stock market, despite its complexities, can yield higher returns. It's a dynamic environment where fortunes can be made, and you don't have to deal with realtors, lawyers, tenants, and city services. Historically, the average annual return for the S&P 500 is around 10%. That's a significant return on investment, and many funds can easily outperform this benchmark. Now let's compare that with the average return on real estate, which currently sits around 5 to 7%. Big difference, right? So what should you consider when making your choice? If you're looking for a secure physical investment, real estate might be for you. It's proven and reliable, and it offers a sense of security and options that you won't find with other assets. But if you're looking to bypass the world of renovations, tenants, repairs, and mortgages, as well as potentially gaining higher returns, the stock market is probably the way to go. It requires doing the research and understanding your risk tolerance as well as your investment style. But we have more access to markets, information, and technology than ever before. Being able to open a brokerage account with no fees and trading anywhere from a cell phone, being able to build generational wealth and develop financial freedom just by understanding funds and allowing them to do the heavy lifting for you. Real estate typically allows you to leverage an asset by taking out a mortgage and having your tenants pay it off for you while your property appreciates in value. This is one reason why many people flock to invest in real estate. However, the same idea in principle can also be done in the stock market by using margin or investing in funds that use leverage. And again, the interest cost of borrowing, the repairs, the maintenance, and the risk of having unknown tenants must all be taken into consideration when you decide to borrow on a rental property. Don't forget to like and subscribe for more weekly videos. And as always, stay calm and stay invested.